We are back, and we are back with some fire content that will literally help you elevate on your trading. On today's video, we're going to be talking about something that really helped me to maximize my win ratio. Right? I was able to maximize my win ratio from anywhere from 52 to 58% win ratio to above 65, 70%, which is crazy. But with that being said, let's get straight to the video and let me show you exactly how. So as you guys can see right here on the charts, I'm looking currently at Euro USD. But one thing that helped me understand the overall probability of market direction is the following. I want you guys to see this. I have separations on every single day. Separation, separation, separation. This allows me to understand the market cycles. And talking about market cycles, one thing we really want to pay a lot of attention to is the session that is traded before the session that we are trading. Why is that? It gives us hints. In this example, I want to show you guys the following. We have London session. We have London creating lows, and we have London creating highs. And then as well as we can see, market London creating lows, London creating highs, London creating lows, and London creating highs. This will allow us to understand what could potentially happen during New York. It gives us hints. It allows us to know where the market could possibly direct itself. And let me show you how. Now, one thing is for sure. The fact that we can read off the top of our head where market created that low and where market created that high of London once we are done with the London session. It's fairly difficult to really find that London high or that London low within that London session. So what I personally do, I wait for London session to develop. I wait for London session to finish, to come to a close. Once it comes to a close, we have New York session. This is where it gets fun. This is where the probabilities can really come in fact to a point where you will be more sure about your direction than any other day. Reason being is for the following. London will make you a high and a low. Understanding where you are in the market will give you an understanding of where the market could potentially direct itself into. What do I mean by that? London will make the high of the day or the low of the day, one or the other. So by having objectives, in this case scenario, we have high and low London. We can see how market created a wick on London, and then we also created a nice little wick right here on New York. Now, this wick that was created on New York gave us a trend line. And it gave us not just any trend line, but a liquid trend line, a trend line that could be potentially used as an objective reason why market could potentially continue on going higher. Underneath that trend line, we can see the following. We can see how market on London session, it gave us a nice point of interest right in this area. So we can clearly see the setup developing. We have a liquid wick. We have a high of the day that was created by London that could potentially be manipulated, and we have a low of the day which London created, which could possibly be respected. Now, as we look at the probabilities, we have higher probability for market to go to the upside due to the fact of the objectives. We have this liquid wick, and then we have this nice high over here that market could target. As we approach the New York session, we see how market taps in, and we have that spike above the liquid wicks and then above those highs. Crazy. But now let me go and show you guys another example. Over here, we have London low, London high. Remember, London low or London high will create the day's low or the day's high 90 to 95% of the time. Now, as we come close into this area, we can see the following. As we go ahead and create that London high, approaching New York session, we start coming lower and lower and lower. As we are able to come lower, we are able to go ahead and manipulate underneath London's lows. Due to the fact that we were able to manipulate underneath London's lows, it gives me an understanding that now we have a overall bearish structure based off of what have London provided us previously, which is this high. So a secure stop would be above these highs. Now, as we approach New York, we can see the momentum continuing going down, and the area of entries is very specific for me. It's a specific time. We can see I have a blue line right here and I have a blue line right here. Look how precise these blue lines are. As soon as it hits this blue line, we have that big move to the upside. As soon as it hits that blue line right here, we have that big move to the downside. At a momentum time. Respecting certain things. In this case scenario, what are we respecting? We are respecting an area of imbalance that we had previously, right over here. We come, tap, test, and continue going lower. Exactly in that area. Letting me know that I could place my stops above these highs. And also understanding that if market's looking to go lower, it's going to look to go underneath previous day's lows. In this case, previous day's lows we can have right here. And there we have a nice target. In which we go to lower time frame, we could potentially refine this target where our stop loss could be lower and our target could be for at least a 1 to 2 risk reward ratio. Now, that's an example of just showing how momentum will actually go through New York and how is that you can use momentum to your advantage, understanding that London had already provided a potential high or a potential low. Let's do one more example. Over here, we can see London low and we can see London high. By understanding the fact that market has created London low and London high, okay, I want to see if London had given us any hints, any points of interest in which market could potentially come down into before continuing going higher. Now, as we can see right here, market had gave us a nice point of interest within this area, in which market comes down. We quite didn't test, we go up one more time, and then right here we finally are able to actually have that whipsaw where it tests into that point of interest and then comes up above these highs. So we were able to manipulate these highs. Now, if you were to take this trade at that point of interest, you would have been able to collect that move to the upside for at least 35 pips, which is right above these highs, allowing us to understand that once market manipulates highs or manipulates lows from a London session, we're looking to potentially take away on our position. In this case scenario, we can see exactly how I did that, and then market comes back down and then actually continues going up one more time. So there are a couple examples as far as how it is that you can be using London low and London high. Let me know on the comments down below if you would like to go a little bit more in detail with this, where I actually trade live and show you guys these concepts on a live account while I'm trading in the New York session using these exact concepts of London high and London low, and how is that I can use that to my advantage to understand the overall direction in which the market can direct itself into. But with that being said, I hope you guys enjoyed this quick video. I hope you guys are able to get some information out of it. Let me know by smashing those likes downstairs, which is right underneath, and let me know what you'd like to see next. Also, before you leave, 2 videos a week, Tuesdays and Thursdays, starting from today for 5 years. Let's go.